Good evening, ladies and gentlemen. This is Included Safe Trading Frank. Today is it's approximately 8:08 p.m. on the 4th of October, 2018. Pretty been a long, exhausting week to say the least. This is a strategic midweek webinar. We're off by a day. I think it's a great day to do this and look at a whole bunch of things and make some plans as what we think is what might go on and some forecasts. Session will be recorded, uploaded to the Clueless Safe Trading YouTube channel. Keep in mind, the YouTube channel is available to anyone out there who has internet access. And of course, follow us for some highlights of some of the more profitable trades, more for promotional purposes and such, for marketing purposes on the Clueless Safe Trading Instagram. Would appreciate that. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. So by now we know from my real-time tweets, you all should know the reasons for these type of market disruptions. Markets are always disrupted. You know, there's always volatility. Sometimes it's a little bit more enhanced, and that's what we're going through now. And what the following, what the follow-throughs have been, and most probably will be. And this is not the first time these type of things have happened. The rapidity and the speed is the same as what we have encountered back in February, back in March, April, almost every month. There we get one or two of these big sudden impulse flash crashes in between the usual intraday movements or pullbacks and pull-ups, both sides, that we have gone through. So saying all that, the story always is the same. The retracement levels, the technical stuff that happens right after something big like this happens, like it happened today. The reaction, like they say, every action has an opposite and equal reaction, is pretty much the same. So before I go further into the technical stuff, the main reason why this happened was there's a big blowout on the bond market. Period. That's it. Bonds, just like stocks, have a price. So let's talk about the 10-year bond. So the 10-year bond collapsed when the yield shot up by almost 2 percentage points. Not 2 percentage points, but shot up by about 2%. And they shot up from about 2. We'll look at the chart in a second. From about 2.9% up to 3.2%. That's a pretty big move. If you think about it as a cheap stock, the 10-year bond, for example, which was roughly around 2.9%, shot up to 3.2. So that's like 30 cents on a $2.90 stock. That's a 10.5% move, right? Just the way we look at it as a small spec stock that goes up 10.5%. Think about the bond deals that went up 10.5% on a percentage basis from roughly 2.9% approximately. We'll look at the chart in a second to 3.2%, 3.21%. This today intraday. So that's a 10.5% move on bond deals. So that obviously pushes down the price because it's inverse correlation. Bond deals go higher, prices go lower, and you have a massive fallout on the bond market. So bond funds, a lot of them are, remember the bond market, the credit market is a huge, it's much, much larger than the stock market. I always compare it to an iceberg. What you see on the top of the stocks, what you see underneath the surface is the credit market. So when you have that type of price drop in the range of 5, 6, 7, 8, 9, 10%, and bond deals shooting up 10.5%, I mean, percentage-wise moving up 10%, you're going to have huge, huge multi-billion-dollar margin sellouts. So that's really the main reason why this happened. Of course, it has a ripple effect. And the ripple effect of that is emerging markets. I explained that in my previous videos. Emerging market debt is tied with US dollar. US dollar moves higher as our interest rates go higher, right? You guys understand that. And And that causes emerging markets to their currencies to go down and their markets to come down. And that's really what happened over the last couple of days, and more so overnight. So when you have that type of effect, it's nothing, everything is correlated. All asset classes are correlated. So you have this big blowout in the bond market. They're going to come up with billions of dollars in margins, and they're highly leveraged, in margin calls. They sell stocks to cover that. And that's why you have these big random fallouts on the NASDAQ. The media looks for a reason why it's falling. They'll say, oh, it's the end of the tech run, blah, blah, blah. And, they're always looking for a reason, and it's the end of the bull market, blah, blah, blah. Individual stocks get shattered, options go upside down, technical charts break down, all kinds of stuff happen. So the reality of the thing is that when we focus on actual technical charts, what it does is it helps us keep a sane mind, because you get to see the structure of where we can fall, where we can rise, technicals which indicate whether or not the selling is coming to an end. Is it a possible tradable bottom? In other words, do we get a sharp bounce? It started today. You can see that. Very powerful move. This move alone is good for about 100 to 200% on intraday SPY, SPX calls. You can see that. The SPX 2920s, to give you an example, at the lows were on 65.70 cents, and they closed at $2.30. So that's big. That's 200% plus net ROI, return on investment. It's a three-bagger, but it's a 200% plus ROI. So charts these tactical charts and the structures that I create are extremely important and critical, because this is not the old markets, guys. You guys know that. I don't need to explain that to you. But some of you listening out there think that the market is just a one-way, ride, a walk in the park, a pleasant walk in the park. It's not. You have to fight for the returns you get. And we fight for the returns we get. And we get a lot of them. You know that. Even on a day like today, we had big winners off the bat. JPM was up 260% at the open within the first 15 minutes from yesterday. Those are big numbers. The tech stocks were down. Then we had these spec stocks like NBEV and stuff going nuts. Still held its ground and closed towards the high of the days. So technical charts are critical, because without these, I don't know how you guys can manage your money. This is not. Look at this chart. Look at this chart since the 18th of September. Does it look like something that you can show it to a normal person and say, hey, look at the stock market, They'd be like, what is this? And it's like a complete, crazy mess. It's not. It's a complete structure. And you guys can see the structure very clearly. Some of you, I know, can see it very clearly. Some of you might have a little bit more learning curve involved. But to me, it's clear as day. Where we could go, where we could fall, where we could move. Did I play every single move? Absolutely not. Absolutely not. I made a conscious choice as a tactical trader that I am going to buy some tactical lows, scalp, and hold. And I did exactly that. Did I do it with large sums of money? Absolutely not. But I knew directly, and I say that with full honesty, and you guys know that, because I walk you guys through it all through the day by showing these absolutely phenomenal trading charts, that where we could go to. We could go to 2883. If we broke that, of course, then we'd look at the daily charts and see where we could fall. But markets don't just randomly fall. This is not the first time we had a rate tantrum. We had a rate tantrum last year, and the year before, that the Federal Reserve was going to go berserk on raising rates. Some people said the cause for this was last night's comment from Fed Chairman Powell that he's looking to raise rates to the neutral rate. That means, in simple English, higher. He simply said we are very far from the neutral rate, but news likes to make news. Then we had this completely bogus article saying that recently the Chinese put chips in this and that. This happened a long time ago, by the way. This is not new news. So Bloomberg churns it out as new news. So tech stocks like, what? In the meantime, Apple and Amazon, and these guys are solid companies. They don't lie. Why would they lie? If the Chinese were hacking them and putting these chips inside their, inside the components to spy on them, Apple and Amazon would be the first ones to say, come on. They said, no, it never happened. So all this stuff, emerging markets, the rate tantrum, complete stop losses triggered on margin sellouts, everything, it's like a perfect storm. So what do we do as technical traders? We look for opportunities intraday and on a multi-day basis. And that's where we are starting our technical analysis on. Our technical forecast on. So let's take a look. Let's start off by looking at the naked chart. This is the naked chart of the weekly chart. On a weekly view of the stock market since 2016. Right there. First things first. And I'm not drawing any conclusions. I'm a very astute reader of the market. I'm saying it the way I see it. What we see right now. This is just a naked chart without any internals, without anything, just candles. So what do we see? We see a massive, change the color. We see a massive ascending triangle breakout and a bull flag that's coming in to retest that breakout. I said that many, many times, month after month, even in the past week or two, that we will retest this ascending triangle breakout. And that's exactly what we're doing right now. Now, if it totally breaks down below this, and of course, there are many indicators that I follow, which is going to warn you guys that certainly that is something going to happen, then we have a fair shot that we might go and test 2,800. Doesn't break the bull market, but certainly does some real short-term technical damage to the market. That's another 100 points or so. That means another 600 to 700 points on the Dow, which brings us down to 26,000 Dow Jones Industrial Average. But let's not go that further. Let's look to see what's happening now. Remember one thing here. I put out an article from one of the finest and one of the most richest hedge fund managers out there, Stanley Druckenmiller, who was one of the top lieutenants of George Soros when he made his billions and billions and billions. He still makes billions. So Druckenmiller, I'm sure you guys saw that article, and you should see it. He said he wants to, he wants the algos to blow up. A guy like that can't even deal with this market. Small fries like us, we're like the minnows. We're the minnows of the minnows, like flying in, swimming in between all the fish, big fish. Forget the whales. Those guys are the whales. They don't even know how the hell this market's running. Yet we are deciphering this market, demystifying this market through our charts, through the tactical charts, and explaining in the simplest form that these are things that happen. And there's really nothing to be, that the Armageddon is not knocking on the door. Now, if anything, look, the black swan events, waking up every morning, and then, can something humongous happen overseas or here that can completely crash the market 2,000-3,000 points? Sure. But I'm not here to basically, those things you can't quantify. So that's an outlier. We're talking about, for a better choice of words, inliers, things that we are looking in between right now, what's going on. So looking at this thing here, here's your, in the simplest form, here's your ascending triangle. Here is still looking like a bull flag. What do bull flags generally do? They break out to a newer high. Can we test this level here and the 2870 level? I already showed we could do that. That would still maintain the uptrend. And then if you draw just the back of the napkin channel, just like that, you can clearly see that the uptrend channel is very, very valid. So that's your basic analysis, okay? Nothing changed. That's the way I said. Nothing changed. Little bull flag. Nothing changed on the weekly charts. Let's take a look at the monthly. Sometimes, like they say, many times, keep it simple, stupid. Let's follow the KISS principle, then let's get into the minute details of the tactical, technical reading on internals and stuff like that. So let's look at the monthly. The monthly chart is just screaming to go higher. Does in any way or form, and I know you guys agree with me, and we're not crazy bulls, right? We were very cautious about things. We're not, going out there saying the market's going to the moon, going to the SPX, going to 4,000 and stuff like some crazy say. We're just being real. We're being very tactical. We're being tactical realists with the optimistic bullish bias based on what we're seeing in front of us. We got to keep a sane head. That's what I try to do all day long. And I do that well. Can I do it better? Absolutely. Can I freak out and panic and say short, 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 and within 10 minutes the market turns around and goes up 100 points? Why do you think I don't do that? I want other people, members, to do it on their own. I'm showing the levels. If it breaks, go and feel free to short. I'm not going to go in with any type of, I do that quick scalps on the short side too, but I'm not going to put that out as a suggestion. Just everyone understands that, because things are moving too fast. Things are way too oversold, because within 10 minutes, it'll turn around and just completely whiplash you and kill you on the upside. And that's exactly what the market did to a whole bunch of shorts who came in too late. Now, if I knew that something like this was going to happen and my charts were showing it the day before, then that's a different story. Many times we have had hedges, and anyone can have hedges anytime. You don't need me to tell you that. And if you have a gut feeling that there is something, you don't like, then go ahead, put out a hedge. Buy a VIX call, buy a SPY put or SPX put to, buy a VXX call, things like that. But aside from that, don't expect me to let you into this fast-moving, burning cave of shorts, and then you get burnt like big time. I'd rather be a tactical scalp buyer, scaling in at the low end, and then making those type of profits within an hour or two and taking some off the table or all off the table. Those reversals that we play so well. That's really where my strength lies. Now, if I do see a real breakdown in the market on a longer term basis, I'll certainly short the market hard. I'm not that stupid. Okay? So just you guys understand that. So when you look at the monthly chart here, there is absolutely no damage whatsoever. But when these type of things happen and the S&P falls from the highs of where I said it would go to, the E-minis to 29.44, and the SPX hit my levels of 29.45 or so, and this one is at 29.45 on the E-minis this morning. This morning we hit, then you have to know where to pull the trigger on a few things. But without really dragging this on too much, this in no way or form, regardless of what our feelings are, regardless of what the media is saying, regardless of whatever, this is not a full-scale meltdown in the market. Full-scale meltdowns look like this, where we fall below this cup, large cup breakout, and then, of course, you can make a lot of money on the downside. So, saying all that, that's your simple view on the market without any technicals. Now, let's get into nitty-gritty of it. This chart alone can make traders a lot of money as long as they're active, as long as they have an opportunity to spend some time looking at the screens and acting on movements. These movements happen very quickly. This is a 15-minute chart, and you can see what's going on. This was the range we were in, 29.35, and the low end was 29.05. The breakout of that range culminated into a top around 29.44. All this was forecasted, shown on these charts, clear as day. And then when you have a flash crash, which moves down really fast, tries to hold these supports, falls, and then falls below that, this is what happens. This move alone, like I said, is good for 150 to 200% plus intraday. scalping SPY, SPX calls. Okay, so when you look at this here, in very broad terms, there's your range. The market went back in the range. Is it a guarantee that there's no guarantees? Is it going to stay in the range when we wake up tomorrow morning? No. I'm not showing you internals or anything here. I'm just showing you the basic candle structure. Is it more than likely pure pattern symmetry that we are going to come and hit a major roadblock at 29.22? So some of you who bought stuff down here, like I alerted, should be pulling the fast trigger to sell at 29.22. That's a lot of money. Even with a small amount of money, that's a real decent sum of money. Because right there, you don't need to know anything about technical analysis. You just have to look at the pattern. So if we purely follow pattern analysis, this is a very large head and shoulder, inverse head and shoulder. So we could get up here, fall down here, create a right shoulder. Here's your left shoulder. And then get up to 29.30, even get up to 29.41. We've seen this happen over and over again. See, I'm pretty simple. I don't have the time or the energy to, and some of you do, and that's really good, to follow. Mary does very well, block trades and level 2 and this and that. I'm pretty simple. What works for me and what has worked for me very well, I try to preach that to people so they can use that as a very effective tool. I follow charts. Charts speaks like the old Chinese proverb, right? A picture speaks 1,000 words. Everything, every candle is telling me what the numbers are going in there. The more I look at it, I've been doing this for a while, I start getting a sixth sense of what's going on. And then, of course, I to some of you, this may be like, oh, well, he's saying that it might not happen. Well, that's the market. But if I'm more right than wrong, then obviously my credibility is high. So anyway, don't want to harp on it too much. But right now it looks like this was a Friday close. This was the big breakout. Sorry. There you go. And if you're not set up, and I repeat this over and again, if you're not set up at these levels, you're never going to make that nice fat profit at these levels, because chasing the market as it's jettisoning higher, and it might very well do that on the employment numbers tomorrow, because tomorrow's employment numbers probably is not going to be as strong as what the market is expecting. You can't be getting 230,000 plus job growth every month. Maybe it softens a little bit. More importantly, the wage growth softens a little bit. Or the PCE deflator, which is the inflationary gauge within that's within the GDP. But, within the jobs number, whatever, the wage growth is somewhat moderate. Markets will just have a reactionary bounce. It already started. So that's it. So these charts, like I said, you got to screenshot it. You got to put it somewhere. You got to replicate it. Or just screenshot it. So when I'm showing it, you know what it looked like before. Or just scroll down my Twitter feed and look at it. This is serious money here, right there in front of you. When you get like this down here, it's literally, and I'll show you the Maclennan Oscillator today. And what I said to you guys on the Maclennan Oscillator just on the last one or two webinars. It did exactly that. Did I expect it? No. But boy, it's just beautiful what the Maclennan Oscillator is. I'm looking at it on my other screen. I'll bring it in. So anyway, without delving into this too much, you gotta, you want to be an active trader, then you gotta trade these charts. You can make a lot during the day, or make a decent amount during the day. Anyone who came out green today on their P&L did something very right. Very right. You got to shift positions. You got to get. That's just the nature of a trader. If you're sitting there twiddling your thumb and thinking that Netflix is going to be 400 tomorrow because the market is going to jump up and it's going to be up 30 points, it doesn't work like that. If you set it up for the week or going into the 19th, yes, then it works like that. So you can see here clearly what's going on. Let me zoom in, and you can, there's nothing more to explain. Now let's take a look at the 1 hour chart. Another beautiful piece of art, tactical art. It is. Here was your critical neckline support. The critical neckline support, the market tried to hold it for a while. This is 1 hour. Each candle is 1 hour. So for an hour, it fought to hold this. And then it broke down. And when it broke down, the 2905 level, which was the neckline support, keep in mind that this is your head and shoulder. Remember we talked about this? So your head and shoulder is your head, your right shoulders, your right shoulder, your left shoulders. The trading range we were trading in, very nicely. We broke out of that. We hit almost the upper end of the range, the highs, give or take 3 points. We almost got there, and boom, then it gave away. This is abstract art with the structure. And if you can master these charts and understanding them, let me try to put this in the right frame. If you understand the structure of these charts, the way they're drawn, you're certainly going to get hurt certain days, but you're going to come out a winner most of the time. You're going to have green P&Ls on awful days like today. Even in the middle of the day when everything's falling apart and the market's down almost 400 points in the Dow. And I try to make this as simple as possible. I don't want to harp on it. You guys know what I'm talking about, okay? Because there's really not much to really harp on. Here's your ultimate support, short term, 28.83. We almost got there. Why do you think we almost got there, didn't touch it? Because a watch pot never boils, right? So everybody's expecting, okay, if it broke down here, it's going to come down to the lows of the 18th or 17th of September. Because that was the last major, tactical low. So as it's doing that, that algos in the fast-moving machines say, you know what, we're not going to take it there. The shorts are shorting here really hard on this break. Now you know why I don't tell people to short. Because even if I told somebody to short here, right here at the critical support, this is what the market did. And went up. So what would happen? I can't be putting out alert tweets every 3 minutes, and for somebody who's not watching the chart, they would be just, holy cow, they're down 30% on it. They're like, get out. And right then they drop the market. So I can't do that. And then then this line broke. And these are very easy charts to read. So here's your big downtrend channel, right? So then the critical neckline support breaks. Like, whoopee, let's go short here. Yeah, great. This whole thing lasted literally 15 to 20 minutes. Max an hour. Back and forth, back and forth, back and forth. I'm sure shorts got in here saying, that's it, I'm going to scalp this from 28.95 down to 28.83. 12 S&P points. Beautiful move on the short side. But guess what happens? Bang. And they're dead. The short covering algos just shot, decimated the stupid retail emotional trader who's not looking at, who has the privilege or advantage of looking at these charts. You guys do. You guys do. You guys have tools in your hand that I'm showing you in the form of these tactical charts, which are precious. Use them with your own skills and do the right thing. That's all I ask you guys to do.
That's also a retest of the Jan all-time highs.
What are you talking about? What? What's a retest of the Jan all-time highs? Right here?
Yep.
Okay, yeah. We're going to move on to the daily charts. Yeah. So that's what I said. This is a retest of the ascending triangle breakout, which was the Jan all-time highs breaking out. I covered that on the first section, Milan, when I was explaining the naked charts without any structures on it. So anyway, but yeah. So bottom line is there a guarantee it's going to bounce from here? Absolutely not. But I'm looking at a positive divergence. I'm looking at the stows refusing to go down and starting to buckle up. So I'm watching this. I'm even putting these arrows so you guys focus a little bit. Any of you who are not really focusing on the arrows are really being really dumb. If you forget about technical analysis, just freaking follow my arrows. If I'm showing an arrow that should break down, it's breaking down. If I'm showing an arrow that this is going to be the bottom and then it starts to move a little bit ahead of the bottom, that means it's going up. Literally, keep it kindergarten. If you refuse to understand some of the technicalities of real, my version, Pluto Say trading version, of very precise trading charts, so just follow the arrows. Follow the lines and the arrows. So futures are up 5 right now, and before we wake up tomorrow morning, if things get stabilized, then we're going to be at 29.22. Nothing to be excited. I dumped my SPY in the SPX calls that I bought for a very decent profit, very nice profit. And all of you who were just watching all kinds of stuff thinking, oh, well, you know, well, you're going to miss out. Again, this is not the first time it's happened. This is probably 1,000 times it happened. Now, is it a guarantee we get up there? No. We could very well do this, and right now just something terrible comes out on the other side, or non-terrible, but make it sound terrible. Boom, we could do a double retest and finally retest the 28.83 and move from there. We have members of futures traders. They could trade these charts to glory. So this chart is, you know, this is it. The market now, right now is above the critical neckline support, and we are back in that wide trading zone, which is 29.05 to 29.36. That's 21. That's 31 points. That's 210 Dow points or so. This move here, and it's been doing that consistently. At least 150, not maybe coming down to 29.05, but bouncing off 29.18, back and forth, back and forth, back and forth. And if it gets above here, we're going to be back in this zone again. Does it guarantee us or assure us we're going to get up here? Absolutely not. And I don't care, because my charts will tell me what to do. Now, here is another thing that I want to point out. And I know many of you are held hostage to this because of the way you guys have been mentally trained to look at the markets. You guys are always looking for confirmations, or many of you. Many of you. Nothing wrong with confirmations, but there are no confirmations these days. By the time the confirmation comes, oh, the market's going higher. You know, you hear that idiotic term on the media, and many of you maybe believe in it. Well, is it safe enough to go buy? Is the skies clear, you know, for us, you know, go in there buy? The skies are never going to be clear. That's the new normal. The skies are never going to be clear, or the coast is never going to be clear where you can say, okay, I can now buy now and just go to sleep. No. Because it's all about high frequency trading, super fast black boxes, algorithmic high frequency trading, ultra fast computers that even people who manage $30 billion worth of money are so frustrated they say they want the algos to just blow up. I know many of you still haven't quite embraced volatility. You think that it's just going to be a smooth ride up or a smooth ride down, mostly smooth ride up. It's never going to be like that, and I only speak the truth. I could lie to you a whole bunch and say, oh yeah, everything's all cool, now we just go higher. No. No. You're trading between levels, you're trading between structures, and they can last a day or two, they can last a few hours. But the levels that I engage, that I show, they all get engaged, up and down. So take advantage of those inflection points. That's the best I can tell you. Look, nobody.
One thing to add, Clue, is that payroll week, wide range, and highs and lows are preset.
I'm sorry, what? I didn't understand what you said. Payroll week, what?
Yeah, payroll week,
Yeah.
wide range, and highs and lows are typically preset.
Are preset. Exactly. This is something I've said that before too, that the market will go. The futures are always preset, by the way. It's not just payroll week, Milan. My charts are so precise primarily because I am showing you the levels of the supply and demands Payroll week might be a little bit more pegged. Monthly options expiration are very pegged.
No, I agree, but I'm just saying that it's wider range. That's all.
Wide
That
range.
way.
Okay, got it. Yep, absolutely. Because, yeah, absolutely. And so anyway, so this chart alone right now looks pretty damn good, but once it gets up here, you're gonna most probably get another reset. Once it gets to 29.22, it's going to, if it's going to be a perfect pattern thing, then this is exactly what the market's going to do. There you go. Okay. Left shoulder, right shoulder, head. This all fast pullbacks, 1 hour pullbacks. Then it's this pattern, which was the big break, which was the big sell-off pattern. This one, believe me, will be replicated. Will be replicated. Look at each of these patterns. Look how symmetrical they are. This is not humans trading. These are, these are mathematical formations. I know many of you don't want to believe that yet. It's kind of stuck in the head. No, this and that. Well, believe me, the markets will force you to embrace these tactical patterns and trade accordingly and do very well. If you don't, unfortunately, you will just not survive. Let's take a look at the NASDAQ. This is your NASDAQ. This is what most of the damage was today. And look how similar the patterns are at every single sell-off. When it was selling off here, I said we would be moving up, and we moved up big. Then we pulled back, getting close to the upper end of that rising wedge. We hit the, we got close, and then we're pulling back. I said today that we would basically, this line was not drawn just to satisfy and show everybody how smart I am. This was drawn this afternoon. Look what the market did. Let me move this box. It almost kissed it right there. Why did I put this support line? Because this was the support line, bounce line for the 24th of September. I picked that as a support line based on the lower end of the rising wedge, and that's exactly what happened. So I put this little box here just to get people's attention because you can see what the patterns are. I can bet, of course I bet, that's what I do as a trader, I bet money, right? That we are going to basically go higher, pull back a little bit, and at one point get up to create a new high on the NASDAQ. Or at least go back and test the upper end of the ascending triangle, which we did just 4 days ago. It's nothing, like I said, you don't need to be a technical genius. Just be somebody who can look at something and understand the visual picture in front of you. Here we have a positive divergence in the making. It didn't do a full reset lower, which I was expecting, but that's okay. But here it was lower, so we didn't get down to that level. So that's why I turned from here. Is that turn permanent? Nothing is permanent. But it's a great tradable opportunity. Could have bought any one of the ones that I recommended and see some of the ones I didn't. You could have bought any of these and they all jumped a whole bunch of points. You could made on Amazon, you could have made 12 points at the close. It was 1910, 1909. The low was 1896. Let's say you bought one share or bought one option, whatever. You made 12 points on the common. Facebook.
Yeah, but NVIDIA was really good for the fake chip news.
NVIDIA was 3 points. NVIDIA, like you see, when things sell off so blatantly like today, you pick the ones which always move the fastest. The NVIDIAs, the Amazons, the Apples. And some of them will move a little bit slower, then start to speed up like a monster. There's lots of choices. You want the cheap ones, you buy Square. Went to 92.30, closed at 94.50. Those options, if you wanted to bought the 98, for example, I'll give you an example of extreme. You could have bought the 98 options, 98 strikes at 10 cents. They went to 24 cents. You just made yourself 140% in returns just by trading a 10-cent option. Forget about buying it in the money. SPYs, like I said, you could have bought it at 24 cents. They went to 80 cents. So I'm not going to keep on harping on. Like they say, the biggest teacher of life and trading is the market itself and life itself. See, it's up to you whether you want to learn from the greatest teacher of all, which is the marketplace, and in the case of life, life. So learn from the market. My charts are simply to show you that these things happen all the time. Now let's take a look at the daily. This is the cup and handle breakout, which has been working consistently. Well, we fell below this on that last leg of the move down. So I have this, I showed you guys that this would be the 2880 or 2879 on the S&P 500. This is actual S&P 500. Would be the level that would be critical support. Well, we didn't quite get there. Almost got there. 3 points. But look at the pattern. If you look at the pattern here, and this is a daily chart, it's still a cup with a with the consolidation channel which broke out, and all it did, and this is the way I look at it. You don't have to agree with me or anything. You know, I'm not in the business of brainwashing people. I'm just here showing you what I see. All it did was it came and retested the breakout of the consolidation downtrend line right there, and it closed above that. You think this happens out of magic? No. This is how those algos are programmed. This is why my charts mimic those things very well, ahead of the game. It's a fact, not the first time. And look what the Stows did. Went and hit the lows of the 7th of September. Right there. Right there. Can it slip lower? Absolutely. Absolutely. Can we come down and retest 2879? Absolutely. But I'm showing you what happened today. And a fair shot what might happen. We will most probably, within the next 24 to 48 hours, I'm not going to say tomorrow, re-enter these two lines here, these two pink lines or magenta lines, whatever you call it, which is acceleration channel. We will re-enter that over 29.25. Once we re-enter that, then we have a fair shot to go back and hit the highs again. And everything that happened today is going to be a distant memory. Because this has happened so many times before. Unless we have a real break in the bull market, which is not seen on the monthly or the weekly whatsoever, then this is just a corrective pullback. And this is the daily chart. There's your consolidation channel. We broke out of it. We fell back into it, and we closed above it. Where's the NQ? Oh, let's take a look at the S&P. This is a great chart. This is a fantastic chart that I've been showing repeatedly because these are preset, right? All I do is tweak the lines and stuff depending on the market conditions. So here was your ascending triangle breakout. This is S&P 500 1-hour chart. And look what we did. There was a big gap here going all the way back to the 27th of September. We tested that gap. I thought we were going to come to the lower end of the gap the way things were going, but no. They said, and that's why I have all these arrows here. These arrows are not put in place after the fact. They're put in place before the fact. So you can immediately react to these situations and buy a little bit here. Don't always wait for confirmation. Confirmation from what? From God that everything is safe? From algos telling you, oh, it's okay to buy? No. Algos are there to completely decimate you, screw you, take your money, leave you in the dust, and then take the market higher. That's their business. They know how retail traders act, where they panic, where they scream. The minute I started to see the panic and the screaming a little bit, which is good, in the chat room, I said, that's it. That was a behavioral game theory sign that things were bottoming. And that was pretty much right there. Because our human mind tells us, oh my God, look at that. Here we go. No stop. Like one of the traders said, relentless selling. Of course it's relentless selling because stops got triggered. But right when the relentlessness seems unending, bang. I mark those because, you know, everything in chat, you know, it's right there. So I try to keep a very calm mind, even at the worst possible time where I'm feeling the highest amount of pain on my positions. And I want all of you to be like that. Because pain leads to pleasure. And the pleasure of making profits, 120, 200% in a matter of 2 hours. That's the pleasure. The pain is here. Embrace pain and volatility, tactical volatility. Don't just dive down and buy just because, you know, it's lower. It can go lower. But when you see a reversal candle, when you see this turning, just buy. What are you waiting for? Confirmation that it's going to come up here? By the time it comes up here, big sell programs are going to hit. So where's the confirmation? I know like I said, my service is very unorthodox. I don't follow the old rules. So many of you follow the old rules. Good for you. Whatever works. I'm giving you just my 2 cents. This confirmation bias bullshit is garbage. It's not the old days. Why? It goes up here. It's confirmed that it's going to go up here. Now they're going to hit the market hard, sell. So right when the old line retail traders say, oh, it's a confirmation, we broke out of this downtrend channel. Yeah, right. And tactical traders who bought here will be happily selling to the confirmation lovers and the perfect moment type of traders. You know, take it from me, baby. Take it. It's all yours because I bought it down here at 2. Maybe I'm selling it at 6. Take it from me. Happens all the time. So what I try to do is I try to put these arrows so you guys can, you know, simply understand. So this is a beautiful chart. By the time it gets overbought here, we should be somewhere here. 29.20. That's 16 points from where we are right now. Well, where we closed at, that's roughly about 100 points in the Dow. And boom, they're going to sell the market again. Will it create a whole big 200-point pullback or 150-point pullback to create a W bottom? I don't know. We shall see. All right, now this is the NASDAQ. I showed all that. Now let me show you 2 other charts and we will close this out because I want to keep this to the point. So here's your Maclennan, the SPX swing 533 that I talked about, right? So the swing 533 had a black, which I didn't notice yesterday. Okay, had a black crow candle, a black doji. A black doji is not necessarily good. So that's why, just looking at this chart, when every time I seen a black doji, well, this time the black doji actually went higher and then it fell. This time the black doji didn't work. But generally speaking, you see a black doji, it basically means that there is something going, that there is a preponderance of pent-up sellers, profit takers. So that's out of the way. Now let's see what's going on here. The STO turns, which have always had multi-day rallies. Always, always, always. When the STOs turn on the swing 533, is still intact. Yes, we're bending down a little bit. And this didn't collapse big time. But this is telling me this is an oversold zone. 10 RSI, standard procedure. You buy 10 or below. You sell 30. You sell above 70, right? That's standard RSI trading, old-fashioned way. So will this sweep down a little bit more? Sure. You still want to be a buyer because it is going to have a reflex bounce. So we could still retest that 2880 level. We could still do that, or 2890, but you want to be a buyer of those tactical dips. So looking at this chart here, this is a swing chart. This is a daily. So if this thing starts to pull up a little bit, you can rest assured we're going to retest the highs again. And if this starts turning, you better be a big time buyer. But so far, the STO on the swing 533, the SPX 533, I've used it for many years. The directional bias chart always works. Timing can be a little off, but every time that the toes turn, the market swings higher. Let's take a look at the Maclennan Oscillator to finish this, and it's going to blow your mind. Every one of you in the session was with me on the last webinar, I believe. I said when you get the Maclennan Oscillator down to the 66, down to the 56, 60, you want to be a buyer hands down. Doesn't mean that it can't slip lower. The Maclennan Oscillator hit 66.24 back in the end of March and stuff. The market market basically ramped up like a monster. These are extreme oversold levels. I can show you many things and keep you guys on for like 2 hours. I saw so many things. The Maclennan Oscillator, I'm going to show you very quickly on the minis on Thinkorswim, was at minus 172. Amazing. There was pure capitulation. Today was almost at 1 point, a 5 to 1, 6 to 1 down day based on the New York Stock Exchange breadth. Those are pure capitulation. And you want capitulations. You want the prices to be cheaper. Buy cheap, buy low, sell high, right? Simple. So this one has overshot the Bollingers. This one is now looking to bottom. Has it bottomed? By the time it turns, the market's already up 100, 200 points. Just so you guys know. It hasn't turned yet. So extreme players who want to buy the cheapest possible prices can always nibble right at these levels. You get down to these levels here. You get down to these levels here on the false toes, on the Maclennan Oscillator. You want to be a buyer. You want to be a buyer. You will have a reflex bounce unless something tremendously bad has completely gone wrong. Then this will kind of move around sideways. But that's not what it looks like. Bottom line is simple. You get down to this minus 56, minus 60. You're going to have an aggressive bounce, very likely 70 to 80% probability. You're going to have an aggressive reflex bounce. Might last 6 hours, might last 4 hours, might last a day, as I showed you on my other charts. But it is going to happen. Nikkei futures are up 95 right now. E-minis are up 5.5. Dow futures are up. Are up 52. Doesn't mean much, but it means that overall at 9 p.m. the market's not completely collapsing overseas. So the Maclennan Oscillator minus 56. Gonna, I know some traders are very aggressive. They just buy hands down. They just hold their nose and they buy and you buy time. You don't buy Friday. You buy next week. You buy next Wednesday or next Friday. You have to buy time on your options. The time premium. And let it just go. My biggest mistake has been that I have bought the lows consistently, but in many cases have not held as the markets have ripped. Not every single day, but looking back a week from now, when the market's up here, I'm looking at my past history. My thing is I sell, and then I don't, and then I don't buy, and then I rebuy it, but I'm leaving all this in the middle, and I'm not there to the top. That has been my biggest failure, guys. Even though I'm consistently showing that on my charts. And that's a fact. Okay.
Thanks for sharing that.
All right. So on that note, we'll all meet up tomorrow. You guys have been great. I think I try to make this thing as simple as possible because honestly, there is really not a complicated story here. The world didn't change in one day. And these technicals always work. It's a question of whether it's exactly at our timing or is it off by a couple of hours or a day or so. But in the meantime, just want to show you one last chart on the E-minis. It's right here. Let's get this out. When you look at this chart, honestly speaking, and this is from the January highs, right? as Milan just mentioned, you know. So we almost came down to it. Here's your 50, here's your 34, here's your 20-day moving average, 34, here's your 50-day moving average, the red line, and here is your yellow line, which is the 5-day moving average. Does it really look like there was massive damage done? They're still trending higher, each one of these lines. And on top of that, there was a big hammer reversal off the 34, which I notified all of you. This is the 5-day, this is the 20. All of them are still trending higher. So sometimes you just got to really think for a minute before you get really seriously, like crazily bearish, as some of you do. And I'm not going to turn everybody from a bull to a bear or a bear to a bull. I'm just showing you what I see in front of me. This, to me, looks just like any other consolidation channel which prompted the media, which prompted many of you to feel that that's it. It's all over. It ain't all over. It ain't over till it's over. And it's not over till we get towards 3,000 or upper end of this big macro channel, the blue line here, of around 2982 on the E-minis. This is still a consolidation channel. And just to highlight that, 1, 2, 3. This is the consolidation triangle. 4, 5, 6, 7. What can I say? Charts don't lie. Our minds do. Let's keep our minds strong. Let's move on. Try to be as tactical as possible. Do not need to go crazy. This is a very, very volatile market. It is not a dangerous market, but it's an extremely volatile market. A lot of garbage coming out of the media. A lot of things are being spun around. So far, so good. As long as the lines are trending higher, you gotta have a long bias. After that, once the lines start to turn around, just like this, these big long-term trending line, 34-day, 50-day, 20-day, 5-day always moves up and down because that's a weekly thing. But when these start to turn around, they don't turn around that sharply, but because they take 34 days, right? I mean, it's a 34-day moving average or 50-day moving average. That's when you know the market said enough is enough. We need to go. And the last thing I'll show you is the Maclennan Oscillator on the daily. On the daily, it's at minus 172. Last time we were at minus 172 was on the 7th of September, where the markets hit a low of 28.72. After that, it went on a big run to 29.45. The last time the Maclennan Oscillator hit minus 141, you can see that right there, when the markets bottomed on the 27th of June at 2,700. And then over the following 1, 2, 3, 4, 5, 6, 7, 8 days, it went to 27. It went to almost 2,800. 1, 2, 3, 4, 5, 6, 7. In 8 days, it was up 600 points, close to 600 points. So these things do matter. Now, can we slip and hit minus 200 like we did back on the 23rd of March? What happened on the 23rd of March? Can somebody tell me? Look at that. We hit a serious low on the market at 25.90. Within 2 days, we were at 26.84. These are big money, and that's the most volatile time in the market. And then we hit a lower level here at 25.53. But look what the Maclennan Oscillator did. It was higher. That's known as a positive divergence. And that's when you knew, and I mentioned this in my videos, that the market was going to rip, and boy did it rip. Just the way it works. It's total machine domination. I didn't say it. I didn't make these things up. I just want to inform and educate you guys, so you guys start to think a little bit differently. As Stanley Druckenmiller, he manages more than 30 billion or God knows how much worth of money. And he's like, blow up the algos. And here we are deciphering the algos and telling you what their next premeditated move might be. So you tell me if we're offering a great service. On that note, God bless you all. We'll see you guys tomorrow.